Welcome to Realty Reels, your go-to Aussie channel for property insights and market trends. Don't forget to like, share, and subscribe to get closer to your real estate dream.
Will Australian property crash in 2026? Let's talk facts, not fear. Everyone keeps saying the same thing. Once interest rates drop, property prices will boom. But what if I told you that rate cuts probably aren't coming anytime soon and house prices are still rising anyway? So today, let's talk about what most property YouTubers avoid. No hype, no fear-mongering, just real data and what it actually means for Australian property in 2026. Welcome back to Realty Reels. If you're a buyer, investor, or just trying to make sense of where the market is heading, this matters. There's a lot of noise right now, recession talk, interest rate panic, and predictions of a housing crash. So, instead of opinions, today we're going to look at what the data is telling us and whether the risks in 2026 are as scary as people think. Interest rate cuts aren't coming. And that's not new. For a while now, many property commentators have said prices will only boom after rate cuts. But here's the thing. Rates haven't been falling, and prices are still climbing in many parts of Australia. Since 2022, interest rates have risen faster than at almost any time in history. So the idea that investors have only ever known cheap money just isn't true anymore. Yes, some people are under pressure, but clearly not enough to stop demand altogether. If they were, prices wouldn't be holding up the way they are. Could rates go to 10 or 15%? Highly unlikely. You'll hear some doomsday predictions saying rates could hit 10 or even 20% again. But let's be realistic. Back in the 1980s, when rates were that high, global debt levels were far lower. Today, debt is everywhere. Households, governments, banks. Think of it like a balloon. In the 80s, it was half filled. You could poke it and survive. Today, that balloon is already stretched. If rates went that high now, it wouldn't just hurt property, it would break the entire global economy. Banks would fail. Businesses would collapse. Governments wouldn't allow it. History shows that when things get too tight, money printing and stimulus come first, not economic self-destruction. Rising rates don't automatically kill property prices. Here's something most people miss. Over the last 60 years, Australian house prices have doubled around 7 times during periods of rising rates, falling rates, and flat rates. Even in the 1970s and 80s when rates were rising, property prices still climbed. Why? Because property is a hard asset. And during inflationary periods, people move away from cash and toward assets that hold value. That's exactly why, historically, some of the strongest asset growth happens during high inflation, not after it disappears. Is a recession actually coming? The data says probably not. There's a lot of talk about recession and stagflation, but when you look at Australian consumption data, something interesting shows up. Spending, including discretionary spending, has actually picked up in 2025. That means people are still eating out, traveling, and buying non-essential items. Mortgage arrears? Still lower than pre-COVID levels, according to major banks. Housing credit growth? Both investors and owner-occupiers are borrowing more, even before recent government support schemes. So ask yourself, if the economy were about to fall off a cliff, would people really be buying more property right now? Even during crashes, property doesn't collapse everywhere. Let's talk worst-case scenarios. During the global financial crisis, Australian house prices fell about 7.5% nationally. That's it. And even then, some regional markets continued to boom. The same thing happened in 2018. Prices fell nationally, yet places like Hobart, Geelong, Ballarat, and Bendigo performed strongly. Property has always been about markets within markets. Some areas slow down, others surge ahead. That hasn't changed, and it won't in 2026 either. So what's the takeaway? Interest rates might rise, fall, or stay flat. No one can predict them perfectly. But history shows that Australian property doesn't need rate cuts to perform. There will always be risk. There will always be noise. But there will also always be opportunities if you know where to look. If you found this breakdown helpful, don't forget to like, subscribe, and stay tuned for more real-world property insights from Realty Reels.